Mark W. Flockhart. Today we're going to talk about how to get appointments with insurance companies. And I've recorded this multiple times, but I can't seem to slap the YouTube voice out of my face. I keep trying to be more political and not mess up and make it perfect. And I'm just going to respond. And this is honestly the process I would take. I think you're going to get really good advice out of this because I didn't know this when I started. First off, thanks for Blue17C for asking this question. He did ask, could you create a video explaining the steps that you have to take to get contracts with insurers being a new agent? If you're a new agent, you have to get appointments with insurance companies. That's the first piece, is understand that they're called appointments. And I don't say that to correct you. I say that because you're going to search every company on your own. And when you Google this, you're going to Google, how do I get an appointment with X company? So for example, if I wanted to get connected with Progressive, I would Google, how do I get an appointment with Progressive? Their very first non-ad link that's going to pop up is going to be that link 9 times out of 10 to fill out an application. That application is going to take about 30 to 45 minutes to fill out, and it's just going to involve all your personal information. If you're an agent that doesn't have an LLC, I highly recommend that you do create a business name, create an LLC. If you don't know about that, at the end of this, I'll link my How to Start an Agency video. But you need to get some sort of a connection. If you don't have one, that's still fine. You can still do it. It's called a sole proprietorship. And you're just going to put your social security number instead of the company EIN number for that part of the application. Once you're done with the application, it's going to take a few days and you'll get contacted from a local rep. That local rep's job is to pre-qualify you, and they will be the person that you're going to work with long term to make sure that you're a fit for their company. Here's the key pieces. When you have those conversations, there's a few things that you need to know and do. First thing, you need to know what type of insurance that company is looking for. What do I mean by insurance? Like, oh, this is just personal lines, right? Or P&C, property and casualty. No, what I mean is, what risk level do they want? There's 3 risk levels in insurance. There's the high risk, medium, and low. And the terms that they have for those is preferred, standard, and non-preferred. Honestly, if you can speak in those terms, they're going to love you. They talk that way. And I talk that way too. So the standard risk is probably the most sought after. It's the majority of companies are looking for that type of risk. They're non-preferred. Don't shy away from it. If the company is looking for that type of business, you need somewhere to put your high risk, the person with a DUI, the person that has a bad driving history, they've had a bad year. That type of person, there are companies that are focused on that person. It's high dollar premiums, high risk. Some companies love that. Others and most prefer the standard type of risk. And that type of client, they're going to ask, what type of business are you looking for? Where are you marketing? Why are you marketing? How are you going to market? Who are you going after? And if it's the standard, which is the most common, that's the person that may have a ticket. They probably own a home. They probably have 2 cars, are married or getting married. That's that standard risk. The preferred risk, which honestly they all want, but most of them are settling because I would say most of us in the US anyways are the standard risk. But for the higher level clients is, okay, no tickets, they're married, they have a car, they have a boat, they've got 4 products that they want to write with this company all in one. They want some advice, they want help, and they just want to get it quick. That's that perfect. They're low risk, still okay premiums. They're not really a high premium type client. Yes, the premiums are higher, but for the risk, they're about average, where your standard is kind of in the middle. So when you do that, how do you find out what that company is looking for? You need to go to their website and just start looking. Spend 10 minutes and start looking over those companies. What type of pictures are on that website? Is there a ton of boats and motorcycles and all? Like, are they looking at those family homes with $100,000, like $500,000, $800,000 houses? They're looking for preferred. Look at their value statement. Look at their About Us page. Read a little bit about that company and find out what talk path are you going to have with that rep. The other part that you've got to know is when you do have those conversations, don't take it personally if they turn you down almost right away. Some companies, and right now the risk is high in a lot of states, Texas is going crazy. Florida's ridiculously crazy right now. Even Michigan, oddly enough, the PIP has been throwing agencies left and right. And some companies just don't want the business. They don't want to take on new companies. And you being new, it's a little bit of a high risk, because if they open the doors, they can't stop you from writing a crap ton of crappy business. You can lose your appointment, but they won't notice it right away, and they may take on too much before they realize it. What they want to do is they also want to have you have some sort of a business plan. If you want to verbally say it, that's fine. I highly recommend that you get it down in some sort of writing. For us, we went to Live Plan. It's just a website, and it's $30-$40 a month. We built it once, and then you can cancel the membership if need be. But it essentially lets you build a long-term plan. So we had a 5-year plan already drawn up, the type of clients, our average household, our average premium, what type of longevity we're going to have, retention, all of that. We built that all into our Live Plan and submitted that to each company. The other key feature that you need to know, and little side secret, is when they ask you about what type of business or how much business you're going to write, don't go crazy. Don't tell them you're going to write $150,000 worth of business because you think you will. They may, by doing that, put you in a pool that puts your category higher. And if you don't hit that goal, you could lose some of the premium, or you could lose some of the benefits, or even get kicked out altogether. So when you typically talk to a company, if it's that standard type of risk, more often than not, $25,000 is a good sweet spot to start. A lot of companies, you may be like, I'm going to come in and I'm going to sell the crap out of this state, and I'm going to do this and I'm going to do that, and I'm going to write $500,000 with you guys the first year. That scares them. They actually don't want somebody that is going to be the straight rocket. You might be, and they're going to love you for it, but sometimes they don't want to go as fast as you think they want you to go. Slow and steady business has always been their model, and that's very helpful for them to feel more relaxed that you're not going to be a wild gunslinger just running out and shooting policies up and down. Granted, 9 times out of 10, that's probably what you're going to do. When you're new, you just got to write anything you can, or you do. But you learn this. It's part of the process. The last piece I wanted to mention, and I once again appreciate you, Blue, for asking this question. If you guys have other questions, by the way, put them in the comments. If I missed part of this, or if you're curious about something, I'll make a quick video and try to answer you as best as I can. Or if you just want to know more about the insurance industry, I'm happy to help if I can, where I can. We actually have, and this is part of that last piece I was going to mention, a network. So we actually connect with other agents. We have them 1099, as we call it, where they can work under our agency. The company that I'm with is Valor Insurance Agency, or Valor Insurance Group. And what we do is we have connected with a ton of companies. So if you're going to join a network, I'm not saying that to join us, I'm just using this as an example. But if you were to join a network, whether it's us or one of the hundreds of thousands of ones out there that tout everything, that doesn't mean that you're not going to have to go through this process. When we joined, because we did join a network when we first started our agency, we actually had to go in to several companies and do all of these interviews and appointments, because the network that we joined didn't have direct connections with some of the companies we wanted to be appointed with. That's a good and a bad. The good is if you join a network, more often than not, they're already going to have that connection with the companies that you want to be part of. So you can actually fall under their wing, and you almost instantly have an appointment with those companies. You don't have to do the interview, you just have to fill out an application. If you do your own appointments, then yes, you have to create this for every single company that you want to be with. The other piece I would tell you is do a little bit of research in your state. If you want to find out which companies you should get appointed with, start with the ones that are competitive. Look at the reviews. Are they good companies to go with? And then start reaching out to those that you think are going to be a good fit for your area. Could you do 30 of them? Sure. But it's honestly not going to be beneficial to you to have too many companies to write business with. I think having about 5 companies to start with is going to be really good. For some people in some states, having 3 major companies is really good. Make sure you have one for higher risk clients so you have somewhere to put them. Make sure you have one that's good with renters if that high risk one doesn't do home or renters. That way, if you have kind of those off sub accounts, you've got somewhere to put them. You want to make sure that most of them will automatically have motorcycles and toys because some of your customers are just going to have that. But then make sure you have 2 to 3 really good fits for that middle line, that standard type of business. That's the majority of the people you're going to quote. And then if you want to go a little bit higher end, sure. Start looking at one company that will give you that higher level or that preferred type of client. Keep in mind that's likely the ones you'll get denied from first, because unless that's your focus and you are already at that level, they're likely going to want you to have several $100,000 worth of business before they even let you talk to them. I found that even for one of the companies that we went with, we still had to prove ourselves. I had been in the industry for over a decade. I could show proof of all of the business I've written, the retention that I had, and they didn't matter because when I started off on my own agency, I was still at ground zero. I had nothing to show, and they still didn't want to take that risk. So for some of them, I had to write $250,000 before they even let me add them to my rating software. It didn't mean I couldn't quote them. I just had to do double the work to get those policies out there. It's not that hard to do if you meet those requirements, but it's just little extra pieces that you have to show proof of. There are some companies that our agency didn't even get appointed with, mainly because they're just not taking on new agents in the state. Other ones want to see where your growth plan actually ends up. It's like, oh, it sounds great. I know you're going to write this type of business and 20% commercial and they're amazing, but I want to see it first. Let's wait 8 to 12 months and then let's talk again. Don't be worried if that happens. That gives you the opportunity to get connected with the ones that are going to allow you to go forward. And then if you want to add the other ones on at the end, you've got that option. Hopefully this was helpful. Hopefully it wasn't too much and over anyone's head. Like I said, let me know if I answered all of your questions. If you have something else that you're curious about in the industry, let me know. I'd love to make a video on it and hopefully help you at least move your career forward. I'm Mark W. Flockhart. I'll see you soon.